The talk of the town right now, guys, is what's happening in AI, because Goldman Sachs, which has been very optimistic in this space, has put out a pretty damaging or darning research note. I point this out just to follow along the string of commentary they've issued. They got very bullish a few months ago. In May, they issued a report about natural gas, about how it's going to be a main beneficiary of AI. And yesterday, they put out a report titled Generative AI, Too Much Spend, Too Little Benefit. And they go to say, tech giants and beyond are set to spend over $1 trillion on AI capex in the coming years, with so far little to show for it. So will this large spend ever pay off? Some of the people they interview are seeing only limited U.S. economic upside over the next decade, while others are arguing that the technology isn't designed to solve the complex problems that would justify the cost, which may not decline as expected. There are others, though, who are a little bit more optimistic about AI's economic potential and its ability to ultimately generate returns beyond the current picks and shovels phase, even though the killer AI application has yet to emerge. And even when it does, they look at whether or not the current chip shortage and power shortage will constrain AI growth. Regardless of these concerns, they summarize in their summary, they still see room for the AI theme to run, either because AI starts to deliver on its promise or because bubbles take a long time to burst. So I suppose the question that I'm asking both of you guys this morning for us to talk through here is not really whether or not this is a bubble, because you only really know if it's a bubble in hindsight. The question is, or how should traders approach trading a bubble type environment, knowing that type of environment is potentially forming, which means a rug pull could be there at any moment in time? Does that fundamentally alter how you approach using the Tasty methodology if you think an asset is wildly mispriced because of bubble conditions?
I have been affectionately calling what I think is an AI bubble more of it's an institutional meme stock explosion. What you just talked about and what Goldman Sachs wrote about is something that I have been talking about and writing about as well. So we have a whole team working on AI here at Tasty, building our own bots that can answer questions, that can help with account opening, that can help with trading questions, that can help with the software, that can answer basically any question about anything you have, about anything related to trading. The stuff we're building is very cool. I'm not sure that I have any idea how much it's worth, how we can monetize any of it, or why it's any different than what anybody else is going to have. Like, in other words, I have had a lot of trouble figuring out how much capital should we commit to this, because I don't really see the monetization of this. I see now why NVIDIA is up, $2 trillion, because every one of these companies, like you said, is spending trillions of dollars. I mean, you can see it. The question is on what, for what?
Sosnoff, you're thinking about it from a trading standpoint. You got to think about it. Trading is such a gray area. I agree with you. It'll be hard for AI to build anything there, but take it down a little bit. Go down to like the data.
I'm not talking about it trading, Tony. Nothing to do with trading. I'm only talking about it.
Hold on a second. How about data entry? How about taxes? Like H&R Block, forget about it. Everybody's going to be able to put in the same thing and get the answer immediately.
I'm not.
How about graphics? How about pictures? I mean, they'll be able to, you go on Instagram right now, I'm following some chicks that don't even exist. I mean, they're beautiful, but I mean, they don't even exist. They're gorgeous. They don't exist.
We're talking about, we're not talking about,
I would never admit that.
We're not talking about its capability. We're not talking about the capability that AI has. That's not, there's no questions around that. What we're talking about, we're talking about monetizing the investment and making it all worthwhile, and how are firms like financial firms like Tasty, or how are manufacturing firms, or how are other firms, I mean, are you going to necessarily trust the code up front? Like, does it mean you get to get rid of, developers and technologists and network people?
Yeah, eventually
I don't know.
To reduce.
I don't know that that's the case. And usually what happens with technology is that it actually ends up costing more and more money, because you're bringing in a lot more people to do a lot of other things. All I'm saying,
you'll have an AI guy who will do your cyber security. Like you'll create other jobs, but you'll definitely change the landscape.
AI needs to be trained. AI does not have the ability to train it. It doesn't have the ability to train itself. It doesn't know what it's looking for unless it's trained to look for something. It's not that easy. AI can.
How about your dad was an attorney? Imagine if he can be able to do like, instead of having a legal assistant, he can have papers and paralegal stuff written, briefs written and found in an instant.
Yeah, but Tony, they're doing that, and lawyers are citing false case law, and they're getting
it's not just
suspended.
that. Again, you're making some. I mean, imagine here. I'll make it simple for you. Imagine we replace you with just an AI bot that just talks like you. Okay,
Yeah,
I can take 10 years of 13 years of Tony Battista on tastylive. I can create a bot that without we can't really recreate your physique. It's too precious. We could create a bot
AI can. But go ahead.
We could create a bot that will talk like you. They will say the same. They will have the same bad jokes. That will say
stupid stuff I say. Go ahead. You can
say all the same stuff you say. Use the same logic. Give the same answers. You think that there's value in that? Because I don't. I don't know how to monetize that. I don't know how to monetize that. I agree. What I want to say, Chris, is that I've had this concern that AI is way out in front of its skis. Way out. And I'm not sure that AI is going to be able to justify the cost. We haven't spent very much money on servers and everything else. Do you know AI is also expensive? When we go out and we run a number of searches and queries and everything else, it's not free, Tony. You spend
I get it.
You spend a lot of freaking money. Just internally when we run searches on using AI, it's expensive. When we send it out to all our customer base, and you have potentially a few 100,000 people or firms that are bigger than us, like Schwab or Fidelity or something, and they send it out to 10 million people to ask questions. I mean, are they going to want to pick up the $200,000 or $300,000 bill every month for all the queries that are made? I don't know the answer, Chris. I'm not so sure free AI is really free, and I'm not so sure that it answers all the questions and helps the same way and is monetizable. Is it a game changer? Of course. Is it something super cool? Of course. Does it justify the current prices and valuations that we're seeing? I don't know, man. I don't know at all.
I think we're probably still in that I don't know phase, which is why the bubble probably still has room to inflate if it's a bubble. Some of the recent earnings reports from companies like Broadcom or even an Amazon through their cloud services showed that there are beginning to see some legitimate revenues. But one of the primary concerns here is, what's the timetable for return on investment, right? Tom, if you came out and said, we're going to invest $100 million in this and we think we're going to be able to realize $1 million over the next decade in revenue, people would look at you and say, what? That doesn't make any sense. But if you turned around and said, we're going to realize $1 billion of revenue over the next 10 years because of this $100 million investment, people would turn around and say, hey, that's a good use of capital, a good use of money.
No question.
But no one's doing that. But we don't have that clarity right now. And so that's why this is still that gray area, which I hate to say it. I've been saying it for a few months. We don't know where the top is. We don't know where the valuations peak out. We don't know if this is a bubble or not. And until the trend changes, you can't treat it like a bubble and treat it like a top just yet.
There's no question, Chris. That is the dilemma that This is not a thing right now where you're investing $100 million to make $1 billion. Right now, you're investing $1 billion, maybe $2 billion, $10 billion to make $100 million or less, a lot less. In this case, I don't think anybody's making anything. I don't know how they're going to monetize this. Like internally, we're trying to figure out, is the technology itself cool enough to potentially monetize the totality of everything that we're building? And we have no idea. I don't think so. Not so far in the world of finance. Something that can answer questions is not necessarily worth, $100 million. We are definitely challenged right now figuring out how much to invest. And I'm sure every company is. AI is not that complex a thing to build. I hate to say this, but anybody can build it. It's not rocket science.
You know what, Sosnoff? I'm going to go to your replacing me, and I think my friend Wes is 100% correct when he writes in, what he heard is, I love you, Tony, and I can't replace you, after saying everyone is replaceable yesterday. So I think yesterday you were using AI's information, and today you were using the truth.
I wouldn't replace you with, when I say everybody's replaceable, that means I can replace you with another person that's like waiting in the wings. I got a whole room of them. but AI is not an acceptable replacement. Like I listened to a couple of people that did that. They did their own shtick and then they did the AI shtick. And I listened to some DJs too that did their own stuff and then did and it's kind of cool, but it's
music. My son played me some music. I don't know, it was from Diddy or somebody like that. It sounded just like them. It sounded really good, had a great beat, and they created it in seconds.
Yep, that's true. Next concert you go to will be not Bob Mayer, but Bob Mayer AI.
AI.
Chris, this is a fascinating topic because we are going to be debating this, for a long time. But I will say, when you think about it from a risk reward perspective, the reason that Goldman pushed that out is because they wanted to get ahead of the risk in all these stocks. They're like, listen, we have no clue. And obviously they have no clue. They needed to get the first message out there. So later on, if some of these stocks do crater, and they will crater. I mean, it's no different than any other, it's really no different than anything else that just kind of explodes. People are writing into me, they're giving me examples of things, like blockchain and things like that, where, these things, they do come down to earth. And I think you're going to see a movement down to earth.
It wouldn't be the worst thing in the world. We're still in the building phase, of course, the picks and shovels. One of the bright spots, I think, in the most recent round of earnings reports was Adobe's earnings, because they are a software company only. It's not like they're selling the GPU, the hardware. They're not building data centers to lease out like an Amazon through their cloud services. They're purely customer and business facing for applications, and they beat expectations. So there are signs that we're starting to move through the pipeline little by little, but it's not really widespread. And I think the metric that everyone's looking to is productivity boost, right? This is a tool that's supposed to make workers more efficient. For myself personally, I have about 15 years of writing that I've done in some professional capacity. And over the past several months, I've been feeding my own model here, my own writing, to build out a profile, an analyst profile that can speak in my own words. So I can type in a bunch of data and it spits out information. Oh, hey, that looks like me and sounds like me. Now I can get back to writing and building on it and building off of that much faster, right? So that's like, for an analyst, it makes sense. But how else can we use it here at our work? I will let you know, Tom, because I'm struggling to think of that too. And Tony, you're irreplaceable in my heart. So don't worry what Tom says.
Thank you, Chris. Appreciate it.
Chris, good job. Everybody is replaceable. And I hate to break this to you, but that's our rule here, just so you know, because you don't know a lot about our history, but that's our history.
But every good company should have everyone that's replaceable, right? Because it should outlive the mortal men that staff it at any point in time.
I remember Jimmy Johnson when he took over as coach of I think it was Miami at the time, and he said, nobody here has a job. Everybody's got to earn it, except Dan Marino. And he goes, everybody else, you got to earn it. I like when coaches come in with that attitude because I think that's fair. And I
agree.
I also like
it's why Bat and Bat is one of the highest rated shows when we replace you, Sosnoff.
I also like when CEOs come in with that approach. And I think AI has given people a sense of calm. I don't necessarily think that's a great thing. But I also think, listen, it's priced to perfection. I sure hope it lives up to that perfection hype.
To put a bow on this productivity increase, for jobs right now exposed to AI being displaced from AI, the 3-month moving average of the unemployment rate is 3.6%. For jobs that have nothing to do with AI, that will not be displaced by AI, the 3-month moving average is 3.8%. And the AI jobs have actually been getting stronger in recent months. So, Tom, you pointed out that these models just don't teach themselves. You're going to need data engineers and scientists, and I think they're calling them prompt engineers now, to teach these models how to behave. And so right now we're in that phase where we're still building up. And I think that's why we talk about, is NVIDIA overvalued, is Broadcom overvalued, is Meta, name a company that has some AI exposure. While we're still seeing acceleration from picks and shovels, from the building through the pipeline to software, and there are these positive results, you're not going to see the displacement in the economy yet, and the bubble can grow. It's really probably late next year, in 2026, where if interest rates come down and now it's easier for people to build out AI because the cost of capital is cheaper, do we have a recession? Do companies completely jettison the capex for AI? Do they give up on it? We saw that happen in the global financial crisis. People just give up on plans and it sets back technological development for years. So this is a story that we need to continue to watch. Obviously, it impacts a great deal of stocks, equity indexes that we follow and trade here. But to say that this is the top and we're getting close to it in the next few weeks, it's a difficult endeavor. And traders should not trade around that.
I completely agree with that. That's not fair at all, because the top is, that's irrelevant. We're not talking about picking the AI top. We're just saying, if you're long these stocks here, I don't know. Wouldn't common sense say I'd lighten up a little bit?
Well, yeah, that's with all these insider sales. Everyone's saying Nvidia is going to fall because all these executives are selling. No, any competent person, if they have a financial advisor, going to say, hey, 98% of your net wealth is tied up in this one stock. Maybe you should diversify a little bit. Right.
No,
so of course,
insider sales are a little different to me, because insiders have a very different appreciation for their companies. But listen, you brought up some good points today. AI is expensive. It's not just expensive on the hardware side. And the price are going to come down on the hardware side dramatically, because they're going to crash and burn on the hardware and the software side of AI. But what's not going to come down necessarily is the cost of people. And people are really expensive in the AI space. And I don't know if that gets any cheaper.